Think you're too old for life insurance? Think again. Hi, my name's Jess. Welcome to If Jess Can, You Can. I am 51 years old and I was looking at my term insurance recently and realized that I needed to make a change, that I needed to do something different for my family. I can't just have the type of life insurance that I get from my work, because if I lose my job, what am I going to do for my family? So let's talk about, why do you need life insurance? The major reason that you need life insurance is for risk management, for protection for your family. And I know that seems obvious, but here's what the reality is. You've worked hard your entire life and you've saved up money. Now, if you pass away, they lose your income. Can your family handle paying off the house, paying off different debts that you might have, whether it's credit cards or home equity line of credit or car payments? So can they handle life after you're gone? Now, here's the concern is, if you have saved up money, you might be able to just say, hey, go tap into that money. The problem is that's not a long-term solution. So your savings is certainly one thing, but your life insurance policy that you have, not only can it be used to pay off different debt items, but it can be a protection of the savings so that your family, your beneficiaries, your loved ones, they're not having to go tap into that money just yet. They can use that life insurance to help kind of balance out their expenses and the bills and the things of life. So how do you get started even doing anything with life insurance? You want to be smart about shopping. And the way to be smart about shopping when it comes to this product, in my opinion, is to use an independent agent that can take a look at a variety of different companies with a variety of different offerings. Because the reality is, the pricing that's going to be offered is going to be their bumper sticker pricing. It's going to be anybody driving down the road and it's $20, it's $40, that type of pricing. But the reality is, then they're going to get into your situation. So what's your family dynamic? What's your genetics? What's your own current situation? Are you somebody like myself that has a high cholesterol? So where to start? Working with an independent agent is the way to go. That person can go shop you out to different companies in regards to your situation, and they can find out what company might be interested, or which companies might be interested in taking you on as a customer. And so the goal with this is that you look at doing something called term life insurance. And we'll talk about that here in a little bit. Now, the reason that you do not want to go with a company that is the insurer, the company that actually is in charge of those products, or sometimes they call it a captive insurer. So those companies, they only have their product line. They don't have other product lines, and the price that they offer is the price that they offer. One other detail that I did want to bring up is, when you go to do this whole process, this can take a bit of time to do this. So you're going to talk first to some type of insurance person, even if it's an independent agent. And then there's going to be the questions, and it may not come from the salesperson. They may get you over to somebody else that's going to ask you a variety of questions. It's going to be a little bit uncomfortable. You can't hide anything, okay? So if you're on a medication, or if you've got some kind of diagnosis or something like that coming up, they're going to find out about it. It's best that you're straight up and honest with them about it. Don't be discouraged. Then they're going to take that information after they've asked you every single thing under the sun. They're going to take that over to underwriting. They're going to review everything. That's at that time when you're going to find out what is your monthly payment or your monthly premium going to be. Let me add something about medical exams. So there is the situation where the company may go, hey, here's your pricing without a medical exam, and it may be X. You might be okay with that. But if you think that your numbers, whatever it may be, with like cholesterol or triglycerides or your A1C, from doing a blood test or a medical exam, if you think things can go well, you could potentially get a lower premium. So something to keep in mind, possibly considering doing that medical exam if that makes sense for your situation. So let's talk about term insurance versus whole life insurance. So term insurance is exactly what it sounds like. It's setting up a specific term. So it could be 10 years, 15 years, 20 years, 25 years, 30 years. And what you're going to do is make a set payment every single month. Usually they have access to your bank account, and that's recommended, so they can auto draft what that premium amount is. It's not going to change for that term, and they're going to have it set for a certain amount of coverage. So it could be, I'm just making up numbers here, $150,000 to $500,000 to $1 million. And you are even able to stack on life insurance policies, and that's something, of course, that you would want to disclose to the insurance company as well. So term insurance is exactly what it sounds like, but one of the key things for you to know is that it's typically a lower premium. Obviously, that changes based on the health thing. That's always going to be the case, but it's typically a lower premium. My own personal opinion, I'm not a financial advisor, I'm not an insurance agent. I do recommend term insurance as the direction to go. There's a term out there called permanent life insurance. Now, permanent life insurance can be a whole life insurance, and then there's also different types of universal life insurance. So this type of policy will have a cash value to it. This type of policy does also have a death benefit, which means a payout to your beneficiaries. And this type of policy also can move with the market conditions and gain in value. So in the permanent life insurance, the cash value grows. Again, I mentioned that it has it can be tied to the market, and also this type of policy will have like a guaranteed interest rate. So there's going to be potential for growth that's within this type of life insurance policy. I personally look at it as another form of an investment, which is also why many times it's recommended that a term life insurance be used as that risk management tool, and then do your other types of investing out there, whether that's your IRAs, your 401ks, or just putting money into some kind of money market account. Another thing for you to know in regards to these permanent life insurance policies is this value grows tax deferred. The taxes that you would pay in the United States is going to be based on when you do an actual withdrawal from that account. That's when you would pay your taxes on that. Okay, so we also talked about premiums or life insurance monthly payments. So the whole life insurance will have a fixed premium that is, and what you typically would do is have it connected to a bank account so that you'll make those payments. Again, it has a guaranteed death benefit as well. So another type of permanent life insurance is your universal life. And again, there's different types of universal life insurance policies. But universal life insurance policy is something that you do make a monthly premium or monthly payment to, but you can adjust that. Also, there, as I mentioned, in whole life insurance, there is a death benefit or death benefit payout that happens, and that amount also can be adjusted along the way as well. Universal life insurance can accumulate cash value, and this amount or this cash value is also tied to market conditions. So it is essentially that money is being invested, and so just like if you buy stocks or any kind of mutual fund, it is tied to risk. It can go up, it can go down. So that ends up making the universal life, it can be a little more risky. One thing to note about universal life is when you are making your monthly premium payments, it's really important for you to know is in the early years, the money that you're paying goes towards administrative costs with this program. So you're going to see a slower rate of increase for those first few years with the cash value of this type of life insurance policy. How much should you get for life insurance policy? The recommendation is to get at least 10 times your annual income or annual pay as the amount for your life insurance policy. So that might be, for example, if you're making $100,000 a year, that means that you're looking at $1 million policy that you would want to get. Now, there's chances that that's not feasible, that doesn't make sense for somebody, and it also depends on what stage of life that you're in. That's why I also believe that you should take into consideration is, do you have a mortgage amount that needs to be paid off? Is there other debt items that need to be paid off? So things that if your income was gone, that you can help your family out by making sure that those items can be paid off or paid for, so that they can continue on without you and not having to tap into the savings and monies that you've put together. Again, insurance, in my mind, is a risk management tool. That is also why I recommend getting a term life insurance policy, because those premiums or monthly payments are typically lower dollar amounts. So a great question is when to buy life insurance. In a perfect world, the best time to buy it is when you're younger and healthier. And again, I'm 51 years old, and I'm looking at adding a life insurance policy even at this stage in my life. Now, I'm going to admit I should have done something earlier. So life insurance policy, a good recommendation is to take a look at that policy every 5 years and see, is it meeting the needs of your family? I'll give you a quick example. When I got my first life insurance policy, the house that I bought at that time was a $150,000 house. The house I live in today cost a lot more than that. And so when I bought that policy, the goal that I had at that time was for my young wife to be able to pay off that house at least, so that would help her out. I also we did a policy as well for my wife, just in case something happened with her. Now, as life has gone on, I should, and I do recommend that every 5 years, 6 years maybe, to take a look at that policy. You can keep a policy in place. So at that time, I bought a 20-year policy. I could have added on another 20 years and then set that, kind of moved the clock out a little bit further. So I could stack the life insurance policies if it made sense for me financially. Now, this isn't the term, in my personal opinion, is not something to, let's say, cheap out on. You definitely want to try to get a longer term if you can. So me personally, I do like those 20-year terms, 25 years, 30 years, if you can get those types of term and policies. Of course, the cost of that's going to go up. The other thing that I mentioned earlier was just saying, hey, I have something through my work. That leaves you exposed if something does happen with your work situation. Okay, another reason to take a look at your policy every 5 to 6 years as life changes. Besides the change in like a home or additional expenses, you also may have kids that are brought into the picture. So you want to make sure that they're protected. And sometimes life insurance, if you've bought enough, can be enough to pay off the mortgage of a home, pay off other debts, but it could be an opportunity to set some money aside that kids could use towards, let's say, schooling or college expense or a trade school. So let me ask you this question. Do you feel that you have enough life insurance? Do you feel that you're covered? Do you have some regrets that you put it off, that you didn't take care of it? Let me know in the comments. I'm really interested to hear what is the let's say, situation that you've gone through. Did you get it set up in a good place? Do you feel good about it? Do you view life insurance like I do as being a risk management tool? So I'm really interested in your feedback on that. Again, my name is Jess. I really appreciate you watching this channel. I'm hoping that this information is very helpful for you. Helpful for those of us that are over 40, over 50, as we're heading into this next part of the journey of life here, to make sure that we have all of our different, let's say, ducks in a row at this time. So thank you again for watching. I really do appreciate it, and God bless you.